And am such a powerless tiny being? But the same isn't true when an army of ants pools their resources together. Similarly, when common individuals come together and harness their funds together for investment, managed by an expert, can work wonders. Mutual funds are one of the best known pooled investment vehicles that are accessible to one and all. Let's see how you can grow wealth with mutual funds.
Ever wondered how mutual funds work? Well, think of them as your financial superheroes. You see, mutual funds are a type of investment where money from many investors is pooled together. This collective sum is then managed by a professional fund manager who invests in a variety of assets. Each investor owns units, which represent a portion of the holdings of the fund. The value of these units changes daily, based on the fund's net asset value. So, in the simplest terms, a mutual fund is your ticket to the world of investing, even if you have limited capital or expertise. Now, you might be thinking, are all mutual funds the same? Well, not quite. Mutual funds are like a buffet, offering a variety of options to suit your financial palette. They broadly fall into three categories: equity, hybrid, and debt funds. Equity funds invest primarily in stocks. Within this category, there are several types. Multi-cap funds invest across market capitalizations. Flexi-cap funds provide managers the flexibility to alter the portfolio as per market conditions. Blue-chip funds invest in large, well-established companies. Mid- and small-cap funds invest in medium and smaller companies. And thematic funds focus on specific sectors or themes. On the other hand, debt funds invest in fixed income securities like government bonds, corporate bonds, and treasury bills. These can be overnight funds for a single day's investment, short-term funds for a few months, medium and long-term funds for a few years, and gilt funds that invest in government securities. So, as you can see, there's a mutual fund out there for every investor's appetite and goal. But what makes mutual funds, these financial superheroes, a favorite among investors? Well, for starters, mutual funds offer professional expertise. This means your money is managed by experienced and skilled fund managers who make informed decisions on your behalf. Then there's the benefit of diversification. Since your money is spread across different securities, it helps to mitigate risk. What's more, mutual funds are accessible to all. You don't need a large sum to start investing. Even small amounts can be put to work. Furthermore, mutual funds operate under strict regulatory oversight, ensuring transparency and fairness for investors. And let's not forget liquidity. With most mutual funds, you can buy or sell your units on any business day. However, like all investments, mutual funds are not without risks. Market volatility, potential losses, and fund management changes are some considerations to keep in mind. So while mutual funds offer numerous benefits, it's essential to consider the risks and make informed decisions. So there you have it, a quick dive into the world of mutual funds. We've touched on the fundamentals, the various types, and the benefits they offer, including professional expertise, diversification, and accessibility. We've also looked at the risks involved and the importance of considering them before investing. Globally recognized mutual fund houses like Vanguard, BlackRock, and Fidelity, along with India's HDFC, ICICI Prudential, and SBI Mutual Fund, have been playing a significant role in this sector. Remember, like any investment, mutual funds carry risk, but with careful consideration and perhaps some professional advice, they can be a powerful tool in your financial arsenal.
Have you already invested in any mutual fund in your country? Still got any questions about mutual funds? Why not ask questions in the comments and get your doubts clarified right now? Stay tuned, dear learners.